Questions have been raised in some quarters here in the UK about the prospects of stagflation. That is the economic condition brought about by a period of high inflation and low growth. Is this a likely outcome of the current market condition? If so, what's it mean? Welcome to this edition of IG Trading the Markets podcast. I'm Jeremy Naylor. We're talking now to Martin Essex, analyst at Daily FX, who joins us now. With Martin, if we can, to begin with, a talk around this point about stagflation. First of all, this point of stagflation that I mentioned is this situation where we see high inflation and low growth. It's not really an economic condition that is like the technical definition of recession, for example, where we have 2 quarters of negative growth equals recession. So what are we talking about here about stagflation, first of all, as an idea?
Hello, Jeremy. I think the simple answer to that is that when different people talk about stagflation, they talk about different things. But in essence, as you say, it's economic growth is too low and prices are rising by too much. And what this does is it really puts the Bank of England in a very difficult position because the Bank of England wants to lower interest rates to boost economic growth. It also wants to increase interest rates to combat inflation. And obviously, it can't do both things at the same time. So really, it puts the bank in a pickle. And also, there's not very much that can be done about it. So it is a problem when it emerges. And just for the record, I don't think it will. But nonetheless, as you say, it's not a formal economic concept. There's no definition of it. But I think we all know when it's here because it feels really very rough.
But we are told by the Bank of England to expect a period of higher inflation, aren't we? We do know that's coming, don't we?
Well, the latest figures we have are the June inflation rate, and it rose to 2.5% from 2.1% in May. And that was rather bigger than analysts polled by the news agency had expected. It was its highest since August 2018, and it's going to go higher. I don't think anybody doubts that. I think the Bank of England thinks it will go to around 3%, and there are people at the bank and elsewhere who think it might even go to 4%. But the key question that has to be asked at that point is, will it then come down? In the market jargon, will it be transitory? And I think most economists think the answer to that will be yes. Yes, it will go up. Yes, it will go up very substantially to a really very substantial rate, but it may then begin to come down. And the Bank of England wants to therefore look through this. It doesn't want to respond too quickly to raise interest rates to combat higher inflation, because that would stifle the economic growth that we're now seeing.
That's the problem, isn't it? As you say, the authorities have got this difficult situation where if they're faced with this sort of stagflation, as we're defining it, of course, it is a very difficult situation for them to attack. But let's say then, yes, we've got inflation, but it's going to ease before the Bank of England has to act. What about the growth side of things? We know last year, because of the pandemic and the fact that we had the economy effectively closed down, we know that growth went into reverse, of course. And we know that the recovery period, when we get year-on-year comparisons, we're going to see enormous numbers in terms of GDP, some of the biggest numbers ever recorded quarter on quarter. But in context, the economy hasn't really moved on that far from the pre-pandemic levels. And in fact, correct me if I'm wrong, I don't even think we've actually got back to the size of the economy we had before pre-pandemic. Taking Brexit out of it, because obviously that does have an effect on this as well. Surely growth is, in the grand scheme of things, just going to grind along, isn't it?
Well, the disadvantage I have here is that we don't yet have the second quarter economic growth data. But again, the analysts polled by the news agencies are suggesting a GDP growth rate in the second quarter of the year of around 22% year on year. I'll say that again, 22% year on year.
Mm-hmm.
And the previous figure was minus 6.1%. So we're seeing the most extraordinary surge in growth. The key question, as you asked me, is this just are we just recovering to the levels we were beforehand? I mean, is this simply reversing the contraction that we saw? Or is the expansion going to stop? I don't actually see why it should. It's difficult to actually look at the figures on this because we don't really know, but it does seem anecdotally that the economy is really growing quite well, and indeed better than many other major economies at the moment. Um, I don't know why that should be, and there are headwinds, and as you say, could be partly to do with Brexit, but we don't know, and it's not really worth going into that debate.
Mm.
Personally, I see that things are recovering really quite strongly, and that combination of strong growth and peaking inflation should mean that at some stage the Bank of England will be able to take the punch bowl away and will be able to tighten monetary policy. If it tightens monetary policy, that will stop inflation rising any further. It probably won't inhibit growth because growth is doing so well anyway, and that's why I don't see stagflation. I do see the Bank of England tightening interest rates relatively soon. I think the Bank of England thinks much the same as I do, that growth is now on an upward path, and of course that would have a substantial market impact as well.
As we've alluded to, I mean, COVID has thrown up some extraordinary economic conditions, both on the upside and downside. And authorities, of course, have risen to the challenge. It's not just here in the UK; it's around the world that central banks and governments have had to step in. At what point do you see the Bank of England taking away that punch bowl, as you call it? I mean, the party can't get to the point where we are trashing everything because everybody's so drunk on this money. But we're getting to the point, surely now, where we do have a situation where we do have almost too much money swilling around the system, don't we?
We do indeed, yes, and the Bank of England does have to again in the jargon taper its monetary stimulus program quite soon. I think that an interesting question, again, if you're looking at the markets, is which central banks are going to be doing this first and which are going to be to do it later. And I think from what I've heard from the Bank of England that they're going to be amongst the first to move. Well, not amongst the first, but at least amongst the sort of second group to move, and incidentally the Federal Reserve in the United States. So I wouldn't be surprised if it happened quite quickly. I'm not going to take a guess on when because I don't think we have enough guidance from the Bank of England yet. When they are really thinking a lot about this, they're going to tell us and they're going to set out a path for us. And they're going to tell us, are we going to raise interest rate first? Are we going to cut back QE first? We need a lot of that detail. And I think it would be foolish to guess at this point when it's going to happen. But I think the Bank of England are thinking really quite carefully at the moment about doing this relatively soon.
Interesting, isn't it, when looking at this and you consider how to trade this situation? You're talking there of sterling, obviously against the US dollar. We've got a relatively strong attitude as well from the Fed. But if you look at euro against sterling, I mean, sterling has recently, or euro rather, has dropped below recent support against sterling because the eurozone is in seemingly a very much weaker position and aren't looking at removing the punch bowl as soon as perhaps maybe the Bank of England is. So how do you trade this? Do you think that when looking at sterling against the US dollar, for example, where we've got both the Fed beginning to talk about tapering and the Bank of England clearly in that frame of mind, do we see sterling dollar continue to trade sideways? And would your preferred trade be for sterling against the euro, or is there another trade to watch out for?
I think in the very near term, sterling against the dollar cable is looking quite weak. It has eased back over the past week. It seems to be in a very slight trend lower. Um, it's difficult to trade now because we're in the summer doldrums in the northern hemisphere. So trading is light. So markets can move very sharply in either direction very quickly for no obvious reason, as we saw with gold. So I think that probably sterling will ease back a tad because the markets are currently focused on the Federal Reserve. So I think that people are quite positive about the Fed at the moment, about it being on course to taper its monetary policy. policy. So I wouldn't be surprised if sterling continued to ease very gently, but it's not a big drop. And I think the way to trade that is essentially to trade the range. I think that when it gets up to a new high, sell it, and when it gets down to a new low, buy it. I mean, that's not trading advice. I'm not saying that's what you should do, but I think that trading the range is probably better than trying to find a directional trade on it.
Yes, and of course, you say we don't want to give trading advice as such, but it's interesting to look at these markets. And I said, if I can just very quickly go to the euro sterling trade, because the sterling is obviously a lot stronger against the euro than it is against the US dollar, and we've seen this line of what 84.72 broken for the euro against sterling. Do you see that position remaining? How close do you think are we for the eurozone to start thinking about it's time to begin to take money off the table, start to taper, in other words, because we haven't really heard anything from the European Central Bank in this regard?
We've heard from some members of the European Central
Hmm.
Bank, and certainly there are some members of the central bank who are beginning to be quite hawkish. In particular, Jens Weidmann of the Bundesbank. Not surprisingly, the Bundesbank is always quite hawkish. But on the other hand, we're seeing a pushback from people like Christine Lagarde, the ECB president. So what I suspect is happening, and again, we'll never know whether this is true, but I think that there's a debate going on at the moment within the ECB's governing council about what to do. Now, you would assume that that Christine Lagarde, as the president, would win, that they would be fairly dovish, that they would say, let's keep putting money into the economy because it still needs it. But Weidmann is not alone. I mean, I also read something from the Belgian central bank president who was saying much the same thing. So there's a bit of an argument going on, I suspect, and we'll have to see how it all pans out. But for the moment, the markets don't particularly like this sort of thing happening. They don't. I mean, the markets obviously want clear guidance. They don't want to hear one thing from one person and another thing from another person. So I would say the direction of travel here is that the euro is lower. So euro sterling lower, because there seems to be almost no doubt that the European Central Bank is behind both the Fed and the Bank of England.
Okay, Martin, look, we'll leave it there. But thanks indeed for joining us. Indeed, we've taken the conversation well beyond the prospect or not of stagflation in the UK economy. I know that's your position that you don't think that's going to occur, but nonetheless, an interesting discussion around what's likely to happen from this point on. Martin, thanks for joining us.
My pleasure.
Martin Essex is analyst at Daily FX and joining me there for today's IG Trading the Markets podcast. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.